Alright guys, it's Thursday, the US markets have just opened. You can see the price there on the Dow is starting to head up and test the top of that range we've been in. We'll come on to that in a second because first of all we need to go through the important economic data that just came out this afternoon. It was data on economic growth and inflation for the US. Let's start with inflation. It was PCE, which is the so-called preferred measure for the Federal Reserve for inflation. That came in at 6.1%, which was above the expectations of 5.9%. However, at this point, I think everyone can agree that inflation is here and it could head higher as the recovery from the pandemic continues. So a relatively minor overshoot isn't really going to panic the markets all that much. And in fact, just yesterday, the Federal Reserve Chair, Jerome Powell, said that there is more upside risk to the inflation outlook, but of course, he still thinks it's just temporary. Now, what did surprise from the economic data this afternoon was GDP, which missed expectations by 2%, partly due to supply chain problems and lagging private investment. But GDP may now begin to struggle to keep up with its previous gains. Things like the Delta variant, which is spreading quickly, although Jerome Powell did say yesterday that he doesn't think that there'll be much of an economic impact if that variant does continue to spread, and supply and labour problems, as well as the government support coming to an end. All of these things could end up becoming a bit of a drag on economic growth. But still, despite that miss, it was a significant amount of growth, and the US is now above pre-pandemic levels for the first time since the pandemic. Now, in yesterday's Federal Reserve monetary policy announcement, Jerome Powell gave a bit of a hawkish hint by saying that the economy has made progress towards the Fed's goals, which are, of course, full employment and 2% average inflation. According to him, though, tapering will require further improvements in the economy, and there's still ground to cover before they take action. But it's clear they have started discussions. It just seems that they're still a bit divided about what actions they should be taking and how they should take them. So yesterday's meeting was the first deep dive into the tapering topics, the topics of timing, pace, composition, but Powell did give a little bit of information. He suggested that the Fed won't taper the MBS section any earlier than Treasuries. Remember, a lot of people have been calling for that because of the housing market appearing to be overheating a bit, perhaps. But he did say it might be the case that they taper the MBS part at an accelerated pace when they do start tapering. So tapering Treasuries and MBS starting from the same time, but MBS is going faster than Treasuries. Now, I think we can expect the first real signs of what's to come at the Jackson Hole meeting next month, as I mentioned earlier in the week. But as the Deputy Chief Economist at Aberdeen Standard Investments was quoted as saying today, Powell's job at the moment is like trying to turn a cruise ship in a bathtub. I thought that was quite appropriate. Anyway, over to the markets. So we can see here, this US stocks, the Dow, we've got this tight range. It's the same one I said about yesterday. We made it to the bottom, failed there again, and we've got to the top. And right now at the market open, as you've seen while I've been going through this video, it's been failing there as well. So it could be that we're in this sort of holding pattern now until the Jackson Hole Symposium. Is it even called the symposium anymore? At least that's what it used to be referred to as. Maybe I'm old school. But it seems maybe it's a combination of it being the summer weeks now and that we could be in this sort of range. So I'm waiting to see if we're going to break through one side or the other. But at the same time, if we get type 1 or type 2 closes at the top of the bottom, or we find some sort of setup on a lower time frame, I would definitely be interested in trading this as a range. You can see across the bottom, I've got this trend line here, just marking out those lows. I don't trust it that much, but it's just something extra. If we start seeing it interact with that, we can start to confirm it. Now, in terms of other markets I'm watching, I'm going to pull over New Zealand dollar here to the US dollar. This is the 4-hour chart. What you can see is that a little while ago, we broke through this bearish trend line. That's the earliest sign that there's a change in the trend, that it could be breaking, but then we need to see structure break as well. In the meantime, we created that higher low, and we've just tested the previous high. Breaking that would turn us to bullish structure. At the moment, we're still seeing weakness in the structure. But as you can see, that pullback, the higher low, is confirming this Fibonacci range, which means for me, if we can break past this B point, I'd be looking for us accelerating towards those extension levels, using that B point as the path of resistance below, so looking for setups around there. And then you can actually see that we've got the 127.2 almost exactly in line with that previous high, and the 161.8, same situation, those two highs there. So if we are going to be accelerating towards those extension levels, those are very, very clear decision points and may present opportunities for flipping the trade depending if we fail at those levels. Now, just an extra factor to add on top of that, if we go to the hourly chart here, this reversal zone has been relevant for such a long time, and the recent interactions have just shown that it's still significant. So it's breaking through that I'm looking for, maybe a retest from the other side to get that entry, and that'll be a fantastic long trade, I believe. So let me know what you're following, what markets you're following. Leave a comment down below. Hit the like button if you like this update, if you found it interesting and helpful. Don't forget to subscribe if you haven't already. And if you want to know more about how I trade, there's a link to our free training in the description box. Thanks so much for watching. Take care, and I will see you in the next one.